Looking at today's market and media, there's loads of fear surrounding a potential recession. I mean, if you're involved in crypto or stocks, you'll know this already. It's not been a great start to the year. In fact, the S&P is having its worst start to the year since 1939. Whilst we're on the topic of recession, I thought I could talk about the strange price action VW received during the 2008 financial crisis, which led to it momentarily being the most valuable company in the world. The 2008 financial crash was an interesting time. I wasn't old enough to be working, but I still vividly remember Top Gear would constantly joke about how vulgar owning a big-engine German saloon would be, whilst taking the piss out of bankers at least 15 times an episode. Slap bang in the middle of this financial crisis, Porsche, a little German auto manufacturer, created the catalyst for a GameStop-like rise in the value of VW in what's called a short squeeze. So in about 30 seconds, a short squeeze happens when a bunch of people think a stock's overvalued, so they short it. When you short a stock, what you're basically doing in reality is borrowing shares in a stock you think will go down in value in order to buy them at a lower price when the stock's worth less. This effectively means you can pocket the difference. If you short a stock and you're wrong, on the other hand, you're left being forced to buy shares at a higher price, taking a loss in the difference in price. When you close a short, you're forced to exit it with a buy order, which can move the price of the stock higher. Where it really gets interesting is when you add a load of buyers into the mix, and there are more shorts than there are shares available to buy. This creates a GameStop-like scenario. So in 2006, a good friend of VW, Porsche, announced they had plans to increase their share of ownership of VW from the 20% they acquired the year before. This announcement was true. They successfully did just that by buying a shitload more shares in the company. This made the price of VW rise a considerable amount. The value of VW continues rising for the next year or so, and it catches the attention of some hedge funds. They viewed VW now as being overvalued and decide to short the stock a lot. Oh yeah, did I mention VW was in a load of debt, so it did look like quite a good trade. Fast forward a bit to the trenches of the 2008 financial recession. No one was buying new cars since they had no money. This seemed like a fantastic trade at this point, and more funds short VW. Porsche owned 31% of VW at this time, and they make another announcement. They wanted the big boy stake. 75% of VW. No, I'm joking, by the way. They actually released a statement basically saying the probability of Porsche buying this amount of shares was, and I quote, extremely low. Or was it? October 26, 2008. Porsche announces they've actually got 43% of VW ordinary shares in addition to another 31.5% in options. They basically now had 3/4 of VW. Combine this with the second biggest holder who owned 20%, and now there's only about 5% of VW shares available on the open market. Oh shit, the hedge funds exclaimed, beads of sweat dripping from their meaty, shiny, wrinkly foreheads. They were in fact shitting themselves, quite rightfully so, as around 12% of VW shares were sold short, yet under 6% were actually available for buying. This would make it literally impossible for all the short sellers to exit their positions. Porsche assured them that they would be able to exit without having to live in cardboard boxes outside their nearest Audi, but this turned out to be far from reality. In 2 days, VW's share price jumped almost 500%, making VW the world's most valuable company as of October the 28th, 2008. Short sellers ended up buying VW shares at up to €1,005. Porsche the next day then offloaded 5% of shares, which was a Chad move. It took about a month from here for the stock to come back down to a reasonable valuation. In total, hedge funds lost over $30 billion from their trades, with many traders not even being able to afford a new pair of unsoiled suit trousers. So who won? Well, Porsche did. They made a boatload of cash amidst a huge global recession, and their CEO, Wendelin Wiedeking, was charged with market manipulation, but these charges were dropped later. So anyway, I thought this was a really interesting story about how VW became the world's most valuable company, albeit briefly, thanks to their good friend Porsche.